Assalamu alaikum. Welcome to the session 1, lesson number 4. Live Drame Tax and Associate LLC. Today is a Saturday, January 13, 2022. Today is a big topic, a very interesting topic. I would appreciate it if you take opportunity to watch this video because you're going to learn a lot. So the topic is understanding the concept of income tax and how it works. Thanks for joining me once again. As I promised to make the 2 educational video once a week, idea is to inform and update you about the current tax laws in general. As old saying, 2 things are guaranteed in life, tax and death. I hope the following will be beneficial. Please like and share this information to anyone might be interested. My name is Ibrahim Adrame. I am certified professional tax prepared in the Bronx, both individual and the business. I prepare taxes for all 50 states. Free consultations is available upon your request. No obligations. I would appreciate if you hit like button below to increases the algorithm of this video so other might be benefit from it. Please subscribe for future video like this. If you're interested in my service, please contact me 347-575-5114 or my email is drame1045@yahoo.com, drame1045@yahoo.com. I provide services for long distance clients as well. Thank you, and let's begin. Today's topic are the following. Recently, IRS sent a letter saying 2022 tax refund will be less than the last year's. I'm going to break down the reason for that. Number 2, how the tax credit works, refundable and non-refundable. The differences between the credit and deductions. I'm going to explain that to you. What is a filing status? That's another important. I'm going to break down to you. What is a tax bracket? That's a very important for us to understand. I'm going to break down and how it's worked. What is the standard or itemized deductions and how it works? I'm going to break that down to you as well. I will prepare tax return and the crunching number so you can read your own tax returns. Also, lastly, I will answer some frequently asked questions. Child tax credit and earned income, credit explanations. So I'm gonna do some comparison here. Comparison between 2021 and 2022. Please listen carefully. And then that will show, even by showing this, the differences between last year and this year. By looking at the first line, 2021, if the child, is under age 6, the credit for that child, the child tax credit for that child is a $3,600. And if the child is a 6 through the 17 or through the 18, the child tax credit is $3,000. And one of the important, thing about the, last year, child tax credit is a 100% refundable. When we say refundable, it means the credit will be, refunded to the taxpayer. Even there is a zero liability taxes. The taxpayer doesn't have to pay any taxes. Whatever credit that is given to taxpayer will be 100% will be refundable. So that's what I mean by refundable, because some credit is not refundable. I am going to explain that in further detail later. So when you look the 2022 this year, the child from age 1 up to 18, the child tax credit is a $2,000. You see, here right there is $1,500 difference between last year and this year. And when a child is a 6 to 17, doesn't make any difference this year. So from 1-year-old child to 18-year-old child, the child's still gonna get $2,000. However, the refundable portion of that credit is between $1,500, $1,500 to $1,600, $1,600. So by just looking at just to comparison, I told you last year, refundable credit is 100%, refundable, but this year is only, $1,500 refundable, which is, remaining, $500 either used to reduce your tax to zero or you lost that credit. So that's to clear it out. Um, then the number that the number of children one can claim your tax return is not limited. You can claim as many children as you want, but then again, if you claim too many children, that will trigger the red flag for IRS to audit you to prove all those children you claim. So the less is better. Ideally, IRS encourages people to file not more than 4 children. So now we talk about child tax credit. I'm going to explain earned income credit, known as EIC. So this is another important credit the taxpayer if the taxpayer gets, and they will increase your tax refund. So this is a very important to understand the concept of how it works. So it has to do with the filing status. If your filing status is single, head of the household, qualified widow or widower, for the person not having any children, you cannot make more than $15,821. If you marry filing jointly, you cannot make more than $21,710, and that's the maximum. Income you can make in order to get the EIC, earned income credit. All right. So that understood. So now let's talk about the credit itself, and then look at the chart. So if one does have a zero child, let's say you file your taxes, you're a single person, you don't have any child, you make the 15,281. The tax credit for that is a very little, is a $538. But if look the big difference, if you file taxes and then you a single person, you met the $15,821, and then you file as a head of household, you will get up to $3,584. So that's the max you can get. And then 2 children, you will get $5,920. Those are the 2021 number, but look, the 2022 number is even increased a little bit. So if you file with a zero a child, with the a single head of household or qualified widow or widower, you will get a 543. But I'm talking about, look, the last columns, that's a 2022 number. If you file with the 1 child, you will get the $3,618 for 2022. If you file with the 2 children, you will get the $5,980. And then if you file with the 3 children, that is a maximum. That's maximum allow children you can claim for EIC. That you will get up to $6,728. I'm sorry, that's a little mistake right there. $6,728 for 2022. Tax return. So by just looking at those 2 credit, is the one, it is important to understand how the credit works, because a credit is always better than deductions, which is I'm going to explain to you further later. So understanding credit versus deductions, and the credits, how the credit and the deduction worked. We're gonna read the definition first. It's important to determine your eligibility for tax deductions and the tax credit before you file. Deduction reduce your amounts. Deduction reduced the amount of your income before you calculate the tax you owe, and the credit can reduce the amount of the tax you owe or increase your tax refund. Certain credit may give you a refund, even you don't own any tax. So now we're going to talk about the filing status. It is very important to understand this concept as well, because all it had to do with the taxes, and the bracket, we are going to talk about it. So there are 5 filing status. Number one is a single, and then look the chart. If he's single, and you're under 65 years old, and the filing status okay. Okay, let's talk about filing status. Filing status. Okay, let's talk about filing status. And there are, five, filing status: single, head of household, married filing jointly, and married filing separately, and the qualifying surviving spouse. So those are the five, and each one of them is a requirement. So those filing status is also, associated with the, the certain amount you should have in order to qualify. Let's talk about the filing status. Okay, let's talk about the filing status and requirement to file taxes. And this is an important one. So these are the filing status and the required amount you should have to file taxes. If you have it under those numbers, you're not required to file taxes. You can file it, and if you pay any federal income taxes in order to get the your refund. But then again, you don't have to file if you don't have to file if those number does go below those particular number. So the first one is a single. If you're a single person and then you're under age 65, if you make the $12,950, you're not required to file income tax. Basically, that's equal to standard deduction. Again, it's good to file because there's so many variety of reason. And then also, if you pay federal income tax, and it's good to file because you're gonna have a refund. And if you're 65 and older, and then if you met the 14,700, you're not required to file taxes. Number two, the head of household. If you're the head of household and you file you under age 65, and then you met the 19,400, you're not required to file taxes. Then again, if you worked and pay taxes, it's good to file taxes to get to your refund. If you age 65 or older and then you met the 21,150, again you're not required to file. Same thing for number three, file marry filing jointly. And if you under age 65, both spouses, and then your income is 25,900, you're not required to file taxes. And if you 65 or older and the one spouse make the 27,300, same rule that apply. And then if you're 65 or older, both spouses make the 28,700, you're not required to file taxes. And number four, marry filing separately. Wow, that is one of the baddest filing status out of all of them. So if you marry and filing separately, any age you have to file income tax, and if you make more than $5, you have to file income tax. So this category, no one does wanna be in this part, but people do in different reason, which is in upcoming video we're going to explain that. So number five, qualifying surviving spouse. So if you under 65 and they make the 25,900, you're not required to file taxes. But then again, if you work them and then pay the federal income tax, is always good to file in order to get your refund, or some other reason when you file taxes which is you're going to need for that. 65 or older, if you make 25,300, same rule that apply here. You're not required to file the taxes, but anything above those number, then is a requirement to file taxes. That's basically what I'm saying. So that understood. Filing status and requirement. Assalamu alaikum. Hello everyone. Okay, this chart you're looking at, it is called okay, Okay. This is 2022 federal income tax bracket and the rate for single filer, married couples, filing jointly, and head of household. So, this is a tax bracket, and there are seven different kind tax brackets. Of course, United States, tax system, how it works is called a progressive, tax system. And then there is a marginal tax rate and effective tax rate. Idea is the higher your income goes, the higher the rate will go along with it. And then 7R, 10%, 12%, 22%, 24%, 32%, 35%, and the highest is 37%. So let's just read the first three or first two. So, and then also those tax bracket also depending on your filing status. So certain filing status is higher, yeah, certain filing status, you have to make the certain amount of money in order to equal to the other one. So for example, and if one make the between 0 to 10,275, and for the single filer you have to make the, I mean, when you make the 10,275, you fall and the 10% tax bracket. But look, head household, you have to make up to 14,625 to be fall under the 10%. That's like almost 4,000 some change difference. And then look to for married individual, so between $0 to 20,550, that's when you're gonna fall the 10%, which is almost double of that single filer. So it's always advantage to file your taxes as a married individuals. If it's not the second best category, is the head of household. But the baddest among here is of course, as you can see, is for single filer. But when you look at 12%, tax bracket again, for single filer is 10,275 to 41,775. So that is a single filer to fall on 12% tax bracket. But when you look at the married couple, if you met the 20,550 to 83,550, you're still gonna fall on a 12% tax bracket. And the head of household, if you make the between 14,650 to 55,900, you're gonna fall on 12% tax bracket. So again, single filer here is very very little money. If you met that, and then you easily can fall into the 20s, I mean to that 12%. But for the head household, it can make up to $50,000, and then you're still gonna fall on the 12% tax bracket. And then you can continue reading those tax brackets on your own. Pause it and read them. And it is very updated list for 2022. Here we go. Standard deductions. 2022 standard deductions. So U.S. government automatically give standard deduction to every taxpayer to lower your taxable income, but the number vary every year. It adjusted to inflations every year. So a standard deduction, as I said, here's the following. For the single person, the standard deduction for the single person is a $12,950. Married filing jointly, that will be 25,900. Meaning, if the couple filed their taxes, jointly, they will get the 25. So that is a double of single person. The head of the household, that's a second best spot for this year, 2022. That's a 19,400. So basically, those number is minus your taxable income. For instance, let's say you make the $30,000, and then it will minus 12,950 out of the $30,000. Whatever that left, that is your taxable incomes. So like I said, government does that to bring your income low in order to pay the least amount of taxes. So that is called the standard deductions, and then everybody will have that. There's another one is called itemized deduction. So basically, if you have enough items, for example, the mortgage interest, and which we'll call it the you have a a lot of this apply business. If you have a lot of business expenses and have those deduction, when you put all your deduction together, if your standard, if your itemized deduction is more than your standard deduction, you will go take to your itemized deduction. But this day, 2018, when they passed the Tax Cut and Jab Act, they double the standard deductions every category. So it's really hard, it's difficult for a lot of taxpayer to itemize their taxes, because no matter how many itemized stuff you put together, your standard deduction gonna end up being more than your itemized deduction. So almost 80 to 90% take the standard deductions. Now we are going to file the taxes for Yugo Hase. Yugo is a first name, Hase is a last name. So this is his W-2 for 2022. We're going to read it and then we file taxes. We're gonna understand and then learn how the tax, how the the 1040 works, and the number that is in 1040, how to interpret them, how to read them, so you can read your own returns. And I put all those number my own, and everything here is a fake, so don't worry about it, the security, anything like that. Okay, let's take a look. So 2022 W2 and other information for the taxpayer. The name is a Yugu and the last name is a Hase. Social Security is followed by that, and then you go say date of birth, you go say occupation, you go say address, you go say dependent. He has a one dependent. You go say dependent Social Security, and the dependent date of birth, and then the relationship to the dependent is a son, and you go say telephone number, and the employer company name, and finally you go say gross income. So we have that in place. Now let's begin. So this is the 1040 U.S. individual income tax for 2022. And I want you to pay a lot of attention here, because we are going to crunch those numbers. And then I want to understand how those numbers work. And then if you understand, those numbers, believe me, you can read your own tax returns. Okay. When you look the 1040 U.S. individual income tax return, right, 2022, that's what we're doing today. And you will see those number that I'm going to read it and then explain how those number came about, and then until the last number, whether you're going to have a refund or so. Line 1 is a W2 income, always that go to the 1040 line 1. So let's just say you say I made 19,400, all right, in 2022, and then we put that number in the line 1. So line 2, then we go to line 2. Line 2 does not apply to him, because that consider other income. If the person made it like a dividend income, interest income, a lot of different income, we just for the sake of this exercise, we just say he continued to make the that 19,400. So then in 1040, when you looked at line 9 is a very important. That's a total income. So when you put the line 1, line 2, line 3, if it's the other income included, you put all those together, all total will come down to line 9. So line 9, that is a 19,400. The income is still the same. Line 10 is adjusted, adjustment to income. Adjustment to income, basically, that always, there's a certain adjustment, and that is given to, mostly it's like a business people. When somebody own a business, like a KBI, qualified business, deductions, and some other deductions. So this AGI, if he, any, adjustment, given to any taxpayer, basically, AGI will be considered, not, the line 1 of the 1040. So, for the sake of this exercise, he doesn't have any adjustment to income. So let's go to the adjusted gross income total. It will be the same, because he doesn't have an adjustment. He's a adjusted gross income is 19,400. Now remember, we talk about the standard deductions. So the government automatically give the Guhase standard deduction 19,400. We're gonna minus 19,400 out of his 19,400. So 19,400 minus 19,400, that's equal 0.00. They cancel each other's out. All right. I I took this number for a reason, because remember I told you, if if the taxpayer income is below the standard deduction, right, is not required for the taxpayer to file taxes, is because this reason. Because basically your standard deductions minus that income, you're gonna wipe it out there. So if like I say, you pay taxes, definitely you file taxes to get your refund, because that means you have a zero liability, because in the eye of the government you don't pay any taxes. So let's continue our 1040 U.S. individual income tax for 2022. So line 13 of 1040, that's KBI. We don't, this taxpayer doesn't have that. And then the line 14, that's a total KBI. Again, we added that together. The taxpayer doesn't have that. So then we go to line 15. Line 15 says subtract line 14 from line 11. And then that's a taxable, income. Now we're gonna find out how much is this taxpayer taxable income. So look at the line 14 right here. Line 14, right? That's 0.00, right? And then we take we subtract that from line 11. Look at line 11. All right, line 11 is 19,400, right? Adjusted gross income. So basically, if you remember, we just which we call it, we minus the income from standard deductions. So all of that put into zero. So of course his taxable income would be 0.00. All right. So let's continue to next page. So and now this section here, we're gonna calculate it an amount of taxes he should pay. All right, based upon 19,400. When you look at 1916 1040, the total tax have paid should be $2,318. That's the this kind of taxes he's supposed to pay. Okay, so line 17 does not apply to us, because that's our other line, and we'll put that in 00. Now let's go to line 19. Line 19 is a child tax credit or credit for other dependents. So that is non-refundable. So this is a very important line also. If this taxpayer have any tax liability, right? Let's say the taxpayer has like a $200 tax liability. So basically, remember I told you, every child will be given $2,000, and as long as the child is under 18 years old, 7 or 19 years old for that matter. And so that $2,000 first is not refundable credit. First is non-refundable credit. So whatever the taxpayer liability is, portion of that money or the whole of that money will be used to reduce the taxes first. If the tax, if the taxpayer, tax liability is zero, anything assessed, from the, that number up to $2,000. So the refundable portion of that $2,000 is called additional child tax credit. That is for this year is the $1,500. So for the sake of this exercise, this taxpayer, that does have a zero liability. So this will be 000. I'm going to demonstrate this example, next time, for you to understand that. So we go to line 20. Line 20 is line 20 to line 22 is a total taxes, which is again he doesn't have any taxes, so that's 00. That's 00.00. And in line 23, that's self-employment. If the person is a business person, and then or if a person even employee does not pay any Medicare and the Medicaid, and then that tax will be calculated and will be posted right here. So line 24, that's a total taxes the taxpayer paid, and then will be posted in right here. And we go to the line 25D. When you look at 1040, line 25D is a total federal income tax that was withheld from your W2 or your 1099, and then that number go right here. So, and like I told you, even the calculation we did in the past, this is how the person should have paid the taxes if the standard deduction wasn't given to this individual. That's how the government calculated. So now this person, let's say this person does calculated his W4, like he told his employer, based on my income that I'm making it, I want you, deducted, 12%, and throughout the year. So I don't own the, government, any money, or the government, doesn't owe me any money. So based upon that number, if you, multiply, 19,400, point zero, 12%. So the taxes for that, that's 2,328. Okay. So that goes on, line, 25D. So this is, an amount of money he pay, they withheld from his, his income for 2020, two. So let's go to the next, for 1040 in the U.S. individual income tax. We are reading it 1040 like it is. So line 26 does not apply to us. We skip that. Line 27, that's another important lines. Everybody interested, this line is always good when you have a number on it. So line 27 is, EIC, earned income credit. Remember, we talk about earned income credit. So the earned income credit here, this is the mask, because this person has only one child. So the person get up to 3,733, because basically he made it 19,400. So minus standard deduction that wiped out, and his liabilities is zero. And the government say, you know what? Thank you for working throughout the year, and then you support the U.S. economy. We are going to give you $3,733 because you have a child, you have other expenses, so you can help yourself. So, and that's a good number right there. And then we're gonna put those numbers together later. You're gonna see how this person, refund gonna turn out. So now, line 28 is not a very important line. Additional child tax credit. Remember, I told you, when we talk about a child tax credit, there's a refundable and non-refundable. So the refundable is a $1,500, and non-refundable is $500. So this person got the, a refundable child tax credit $1,500. That is a fully refundable. Okay, but $500 is lost because he doesn't have any tax liability. Therefore, that money is not, that's not used to him, and then it will go waste. All right, that's not a bad thing about child tax credit if you don't have a tax liability, and some portion of that is non-refundable. Very good. So we go to line 29. That's American Opportunity Credit. So if you have a student, he paying for that student expenses. The student is in college, up to 24 years old. You could take the up to $2,500 the credit. But for this exercise, this person does not have any American Opportunity Credit. We skip that. Line 30, we skip that, does not apply to us. And then line 31, that's the other credit that normally found in Schedule 3, does not apply to us. And then another line here is a very, very important line. That's line 32 of the U.S. 1040 individual income tax returns. When you look at line 33, it say add. Now we're gonna add the numbers together, okay? So what we're gonna do now, we're gonna add line 27, and then look at line 27. What line 27 say? 3,733, right? And then line 28, we're gonna put the line 20. We're gonna take the line 27. We're gonna plus line 28. So 3,733 plus $1,500. The equal will be 5,233. So this is how much credit this person has. Okay. So now we haven't finished it, yet. Then we go to line 33. So it's when you look at line 33 at 1040, let's say here, add line 25D. I add line 25D. Okay, so we're gonna add a line 25D, D, and the line 33. Okay, so so let's go back a little bit and look at line 25D. All right, and that will make sense to you. So when you look at line 25D, right here, at the last one is a $2,328, right? This is, remember I told you, this is how much money the government will held, from his W-2. So this money will be refundable. They're gonna give this money back because he has a zero tax liability. So that 2,328. So plus 3,700, line 27. 3,733 plus line 28, $1,500, and then when you put all those together, this taxpayer will get the $7,561. All right, this is his refundable amount, government gonna get, refunded back, because most of those refundable amount come from the earned income credit, and refundable child tax credit, and what you call it, the amount that would withheld from his W-2. So we put those three together. The total is $7,561. So when you look at line 34, right? Line 34 says if the line 33 is more than line 24, subtract line 24 from the line 33. Amount overpay. So basically, they're saying this is amount overpay. Basically, what they're saying, this is amount that when you put together is he pay more than the taxes that he should have paid. So therefore, this money should be refunded back to the taxpayer. So this person has a one child, for this year, giving. He made a 19,400. Standard deduction we're giving 19,400. That cancel his income, so now he has zero income. He doesn't have to pay any taxes. So now all those taxes he pay 2,328. Government to give that money back, and then also government give him 3,733. Line 27, that's called the earned income credit. And then they also give him a refundable child tax credit. That's a $1,500, and then $500 that is lost because he has a zero liability. When you combine those three number, and the person tax refund final number is a $7,546. That's how the basically average tax pay W-2 income is calculated in order to arrive to final number, whether the taxpayer get the refund or. And then I hope this explanation is cleared, and I'm new to this one, so time goes by we'll get better in terms of explanations. So I will making more videos, and then to make you understand how the taxes worked in the United States of America. My name is Ibrahim once again, and my number 347-575-5114. And this year 2022 I'll be filing taxes all 50 states. Anybody interested in my service, just please contact me, and certainly I'll be helping you to save you a lot of money, or at least get you a maximum refund. Okay, now this is another important portions, and another important part I think you should listen and pay attention, because there's a lot of misconception or misunderstanding. People, so is I'm going to be answering some frequently asked questions. Question number one: how many children can you claim on your tax return? The answer is no limit. You can put it as many children as you want, but gotta be careful, because you have to have evidence. If it's more than four, IRS gonna see that as a trigger for the audit. They're gonna ask you for evidence, and if you don't prove evidence, they're gonna disallow all those credit. You'll claim it. Number two: how much is a child tax credit for 2022? The answer is $2,000 per child. Remember I told you it's $2,000, but $1,500 is a refundable credit. $500 is a non-refundable credit. All right, question number three: is a child tax credit is a fully refundable? I already answered this question by question number two. The answer is no. $1,500, $1,500 is the maximum refundable credit, and $500 is a non-refundable credit. Okay, very good. We passed from there. And question number four: can you claim qualifying or relative, and how much is the credit? The answer is yes. First of all, you absolutely can claim qualifying relative. Qualifying relative basically is anyone that live under your roof, and then you support that person more than half the year. You pay half of the year of that person's expenses. The age doesn't have any limit, and but the credit is non-refundable, first of all, and second of all is the cap only $500. More than $500, and it is non-refundable. So if you have a zero tax liability, this number is not going to use to you, because the is non-refundable. Basically, is only there to reduce your tax liability. So question number five: is additional child tax credit refundable, and how much is it? Yep, the answer is yes. Yes, it is refundable up to, yes, it's refundable. Absolutely, $1,500 is refundable, and then $500 we mentioned, that's part of child tax credit is non-refundable. Question number 6: is earned income credit refundable? The answer is yes. It is fully refundable. So earned income credit, as we just did the exercise in the past, is 100% refundable. And the question here: how many children, how many children, how many children qualify for EIC, earned income credit? This is very good questions. A lot of people thought wrong answer. So the max you can claim, EIC is a three, children's, not more than three children. If you put the, let's say, remember I told you, you can put as many, qualifying, children if you want. That government is gonna give it a lot of refundable credit. But for EIC, the maximum is a three children. It cannot go more than three children. So we clear some of the frequently asked question people ask. So now I'm gonna do some one scenario question and answer to clear the air, because this is a lot of misconception among people. So now Hugo Hasse went to Ibrahim to file his 2022 taxes. After Ibrahim told him how much refund he should get from federal and state, he went to 10 different preparer to see if he could get more bigger refund than what Ibrahim told him. Okay, so the question is, do you think other preparer will be able to get Hugo Hasse a bigger refund than what Ibrahim had told him? The answer, absolutely no. No matter how many tax preparer you say want, his refund does not change, because the math is the same no matter where you go. The result should be the same, unless he changes his information, or the tax preparer changes information to different way to reduce his income or something he didn't tell Ibrahim, and then that could change the number. So the reason I'm saying this, because I'm often hearing people saying, "Oh, I went to this, income tax preparer. He gave me more money than the last one." And I'm saying, how? Did you read your tax return? What did you tell the previous tax return? Is a different, information or different paper you give this, the next person, or you just give the next person something is different the previous one. So obviously, if the number changes, your tax information will change it. But if you give the same amount of number, same amount of information to all of those 10 tax preparer, if they're not where each other, your number is supposed to be exactly the same, because the math, for the tax return is a fixed number. So those credit that I just mentioned and deductions, that's only way that can reduce your taxes to a certain limit in order to get the credits, or in order to have a certain deductions. So like I said, if your incomes number does remain the same, even when you go to like a 10 different people, the results should be the same. So just be careful, taxpayer out there, when you go to like a different tax preparer, asking them, "Oh, can you do for me, if you can give me more money?" Some of them lying to you. They might even reduce your income without your knowledge, or do something to your tax return without your knowledge. So I will highly advise you to read before he file your taxes, make sure your number is okay, your income is okay, your deduction is okay, your credit is okay, because obviously you don't want him to give you a bigger number, then later on the IRS is gonna disallow those number, and then you're gonna be in trouble, and then he gonna be careless because he already have his money. All right, ladies and gentlemen, I appreciate so much, for listening today, and like I promised you, I will come, every weekend to make some educational video regarding United States income tax. And this video doesn't mean any way to apply individual taxes. Your taxes, please consult professional before you file your taxes. Until then, I see you. Assalamu alaikum.